Hey guys, what's going on? Kunal here, Bulls on Wall Street. Guys, I want to give you a big thank you for coming into yesterday's Sunday webinar. That was awesome. We had a great crowd and always love the participation, especially in times like this where it's so easy to just sit around the house. It's always cool to see people wanting to learn something new. I had a lot of fun teaching you guys yesterday. And as always, we do a ton of webinars, and you guys always check on the Bulls on Wall Street page to see when the next ones are, or of course, get on our email list and we'll blast them out. But yesterday we talked in depth about shorting and how to do shorts in the first 15 to 30 minutes of the market open. In the webinar, we covered opening range breakouts and breakdowns and the parameters to them. And as I told you guys, when we do these webinars and I teach you these setups, I take these exact trades the very next day. And one of the stocks we were talking about was this RCL. And we took a trade in the chat room using the same pattern at 3160s. And like within minutes, you can see at 9:35, I shorted 3160s. By 8 minutes, I covered up in the 2890s. So netted almost, $3 on my last shares. And it's just a very, very simple pattern, just following the rules of, what we learned in the webinar. When you get a gap down on any particular stock, especially if it's going with the trend, what you want to be doing is waiting for just 3 sideways candles to take the trade short. It's a very, very simple pattern. Now, the key to this is, what's the name? Opening range breakdown. So what that means is you're really only holding this for the open. This is a momentum and quick trade that you short at the open, but you only hold for the open. In trading, there's 3 parts to the trading day. You got the open, you got the middle, and the close. So opening trades are usually meant just to hold for the open, and then you move on to different patterns. Stocks at the open are about volatility. It's about range. It's about finding the equilibrium of where price needs to go. But once that opening drive is done, you tend to find stocks just range for a good chunk, sometimes hours, sometimes even the whole day. So you want to be taking those trades right at the open and also covering them at the open. So you can see what happened to RCL. We've been shorting this, nonstop. But at the open, you gap down and you built 3 candle sideways range here. And you want a really, really tight range. You don't want it to be all loosey-goosey where one candle's above and below and it looks like a triangle or a pentagon. It's got to look very, very clean, just like an opening range. So as soon as you get the gap down, you let the opening range settle. So you got 1 candle, 2 candle, 3 candle. What you want to do is watch the price from where the stock is to where the VWAP is, because that's how you're going to measure your risk on this type of trade. So as soon as this thing pierces down this level here, and I anticipated a little by about 10 cents, so I can get a better risk, I'm shorting this thing. I got 31.65 and my stop was at 31.88. So I'm risking only 20 cents. 20 cents on a $31 stock is very, very small percentage risk. In trading, you want to get to spots like that. How can I risk pennies to make potentially dollars? If you can put yourself in asymmetric reward to risk scenarios, then what happens is even when you lose, you just get stopped out. You lose 20 cents. If you had 1,000 shares, you lose $200, $300. But if you win, you might get a couple $1,000 or $1,000, because you have that range. So as soon as this thing shreds down, I'm short, and then it's just a matter of scaling out. I know that I can't have a perfect scale out, but what I want to do is just scale out accordingly to my rules. So you can see down here, I'm shorting at 31.60s. I cover the first half for a couple bucks, and then I'm just scaling down along the way. So 29.86, 28.90, I take some off in the 30s, and I'm just netting it down all the way down till essentially this thing starts to even out, and then I cover up. Very, very short trade. So this is a 2, 4, 6, 8-minute trade, but look at the range on it. That's the power of this trade. You don't want to hold it any longer than that. Now, a lot of you guys only like to trade small cap stocks, but look, even a $30 stock, if you have 100, 200 shares and it can move dollars, you can have yourself a pretty decent morning, even with a smaller account, by letting the range play out. So just wanted to kind of go over that with you guys because you guys were in the webinar yesterday I want to show you guys, how we do this thing. And as always, I'm live. I'm trading in front of my guys during the day. And, I'm on screen share. So you guys can, when you guys join our chat room, you're more than welcome to follow along and learn and kind of use me for idea generation, but also for education. Guys, I appreciate it. And of course, feel free to join us in our Discord room. It's an awesome place. Guys, take care. And let me know if you have any questions. Send me an email, send me a comment, KUNAL@BULLSON.WS. Look forward to hearing from you guys.